Welcome to the DeFi podcast, where we attempt to imagine the future of crypto, because foresight is what makes great investors. This podcast is for informational purposes only and should not be relied upon as a basis for investment. All statements made by hosts or guests are strictly beliefs or point of views and are not recommendations to buy, sell, or hold any security. Hosts or guests may hold certain securities discussed in this podcast.
Let's get started. Why don't you introduce the topic?
So I guess we're going to go with a little bit of a sort of conspiracy theory story today. I'm briefly going to talk about why I think there is a possibility, maybe not a large possibility, but there's a small possibility that the current iteration of crypto that we know right now could completely disappear and maybe be, kickstarted at some point in the future with a new version.
And what do you mean by the current iteration?
Let's say the top 10 or the top 50 or the top 100 cryptocurrencies or assets maybe going away because of a lot of potential problems and then coming back with a different version. The technology is here to stay, but perhaps the specific assets that we know right now might not be.
So how does the story start? How many variables are there, or how many parts of the story are there?
There's quite a few, probably too many to list, but I'm going to get into the biggest ones that I think are important.
Okay.
So I think there's a possibility for Tether to go away at some point. There's been some investigations into their operations. There's been a lot of sort of shady activities between Tether and Bitfinex. And then there's the question about their collateral backing. So people seem to think that a stablecoin, for example, like Tether or USDC, is fully backed one-to-one with dollars. But with Tether themselves,
a dollar-backed stablecoin, right?
Yeah.
Because this is the category of stablecoin. There's three categories of stablecoins, and this is the one that we call dollar-backed, right? So people assume that they're dollar-backed.
Yeah, so people assume that Tether is fully backed by one-to-one dollars to Tethers, but on their own webpage, they show that that is not totally true. Even where Tether claims to have cash, it's not even purported that it is 100% cash. They claim it's cash equivalents, and other short-term deposits and commercial paper. That could mean a lot of things. And that's only about 85% of their total makeup of the Tethers. So that's a bit of a problem. And then there's the fact that their market cap has been declining recently, which is not a really great thing to see when you're looking at the fact that this thing is not fully backed. The question that I have, now this is my speculation, are they, closing up and burning off some of their own tokens that were maybe not supposed to be in existence?
Even if this is so I think there's 2 points here. Perhaps we don't really know that these assets are actually there, right? It doesn't seem to be a very transparent organization. So they claim this, and that's nice. But even if this is correct, this is not what I want out of a dollar-backed stablecoin. The cash and bank deposits is 5.8%, and then the money market funds is 9.6%. I don't even want them to have money market funds. I want them to be dollar-backed and then make their money by having a minting fee. And instead, they are, this is a pretty safe portfolio of assets, right? But I don't want to be engaged in a somewhat safe portfolio of assets when I'm buying a stablecoin. I want to be involved in owning the dollar. So this is not doing that quite clearly.
And kind of makes you wonder if there's a possibility that some of these things are not fully dollar backed. Is there a risk to owning some of these assets that they claim are, backing up at a one-to-one ratio of the value of Tether? And then this goes further to my point, with their market cap declining, if, let's say there's a run on Tether, people are starting to get out of the market and withdrawing their funds. Could they end up with a liquidity issue if they are under collateralized and big institutions want to get out of the crypto market? They're withdrawing their funds, going to the Tether institution and saying, okay, I want my reserves back. I want to burn these Tether coins and I want my USD back, right? If a lot of these people start coming back out, you could end up with a undervalued or under collateralized token. Kind of makes you wonder if this thing could, depeg, especially if people are aware of this and then it becomes something that people are kind of worried about. Then people could be wanting to get out of Tether. And at that point, regardless of their backing, they could just depeg because people don't trust it. So there's a few potential problems here. And I think, we've seen something like Luna and the UST token. Now, I know that it's not exactly the same thing because this was an algorithmic stablecoin instead of a supposedly dollar-backed stablecoin. But, for sure, there are some people who made money off of UST depegging. So imagine you can, take out a big short on one of these monolithic stablecoins or institutions, and you could actually benefit from them crashing to zero, depegging and going, into oblivion. So
Right. So if you have some information about the fact that there's something shady going on, you can sort of move the market, you pushing out that information while shorting the asset.
yeah, and I think one of the things that makes this a little bit more kind of scary is the investigations and the fact that the SEC's been looking into them and saying, this thing is not what you're saying it is, and we're not sure exactly how legal the existence of this token is.
Yeah, I mean, it's pretty amazing to me, just, the fact that they blatantly say we have 6% of our reserves in other investments, including digital tokens, and another plus 4% in corporate bonds, funds, and precious metals.
Yeah.
These are not dollars.
Yeah.
These are very far from being dollars.
So imagine, 10% of the Tether reserves are made up in things that, during a market crash like we're seeing right now, could be rapidly devaluing. And even though, let's say 10% is not that much, it's still pretty crazy to see that, there is a potential that 10% of the collateral of this token that is making up most of the trading market or most of the trading volumes in the whole crypto market could be going down, could be not worth what they claim it's worth. So
if we want to wrap this up, your point is that there's a systemic risk because of the way Tether runs their operations.
yeah, so I'll leave that one there. On to my second point. There's also the potential risk of USDC. And now I'm pretty sure that USDC is probably more well collateralized than Tether is as a stablecoin. And USDC is owned by Circle and Coinbase. It's recently come out that if Coinbase were to go bankrupt, all of the user funds on their platform would be liquidated in order to, pay back the creditors and fund basically the cost of their bankruptcy. And so if you have Bitcoin or Ethereum or any other asset on on their platform and they go bankrupt, your funds are gone. So I think this is a glaring message, subtle hint, don't store your crypto on centralized exchanges. It's not your keys, it's not your coins. And so USDC being partly owned by Coinbase, I think there's a potential that the same goes for the USDC token. If Coinbase were to go bankrupt, that also applies for USDC.
So do you want to talk about the reporting of USDC a little bit?
Sure.
So it is independently certified by Grant Thornton, which is a reputable firm. But the level of detail that they report on is extremely sparse. So really what they're reporting is that there's a total fair value of US denominated assets held on behalf of USDC holders, and that it is equal to the supply of USDC floating in the market. But we actually have no idea what these assets are. So, you know, they could all be just way riskier assets than we would want. And really, what it comes down to is that, again, the only adequate asset, the only appropriate asset is the dollar, which I'm not a big proponent of. But if we're going to do a stablecoin, I want to hold the dollar. I don't want to hold other assets, which these companies are investing in because, quite frankly, they want to make higher yields. So they are going out and they are taking your money and they are investing it and keeping the profits, but you get the downside. There's
Yeah.
no other way to look at this.
Yeah. Also, now kind of delving into a little bit of speculation, but I'm also wondering if there's a possibility that, for example, Tether and Coinbase could be using their own system to mint tokens for themselves in order to try and get some extra profits. You know, is it out of the realm of possibility that USDC could be issuing themselves, or sorry, um, I'm wondering if it's out of the realm of possibility that Coinbase could be issuing themselves their own USDC based on the reserves held by, their users on Coinbase, because this is how any traditional sort of legacy banking institution would be functioning. If you go and put your money in a bank, they're going to take your money and use it for something else. I'm wondering if there's a possibility that Coinbase could be using the collateral of their users' funds to issue themselves USDC. Now, this could be a big problem. There's, I'll say that there's nothing to suggest that this is actually happening, but you never know, because in these kinds of circles, there's corporate scandals all the time where people are misappropriating funds and doing some, shady things to always just try and eke out a little bit more profit. And so I think,
Yeah, and I think this is the problem here is that this is not done transparently on the blockchain. This is
no,
not. This is opaque. We don't know what's going on. This is a centralized organization, and they can, depending on who's in the leadership and who's in the ranks, there is a real risk there. And we're not pointing at you at Circle or Coinbase specifically, but whenever
yeah.
you're in the situation where you're trusting a centralized organization, there's a risk that this organization could do shady things.
Well, I think one of the big problems that is becoming apparent, at least to me right now, is that there seems to be this appearance that people believe that USDC and Tether are fully dollar backed and that these things are all fully on chain and they're verifiable. But the truth is that they're not, So there definitely needs to be some more transparency happening. And it's really not happening right now. I'm just wondering, is there a what would be, the ideal stablecoin in this scenario? Um, I'm looking at DAI as a pretty good contender, or any actual crypto-backed uh, stablecoins, because at least you know that the funds are there. And if those funds become devalued, they're going to get liquidated to ensure the value of that token. What do you think? I want to get your take on this.
Yeah, absolutely. And that's why I'm happy to be working at Moremoney Finance, because we have the money stablecoin, and our stablecoin is over collateralized.
Yeah.
And it has a bunch of other features to make it keep the peg. But the main one is that we have more in funds. We have more in funds. We don't have the equal dollar amount. We have more in funds than we are issuing. So it's, I think, extremely safe, and it's all done transparently. So
Yeah.
it's, anyone can start reading the block explorer and see what positions exist in the world. So for those two reasons, um, to me, this is the kind of stablecoin you want to own and you want to hold.
Yeah, I've been coming to the conclusion over time, just doing more research and looking into these things. I think the only real solution for stablecoins is crypto backed, because it's the only way you can be 100% certain that these things are fully collateralized in the way that they claim, and that they have a system that will protect the peg and the value of the stablecoin over anything else, because that's what the that's what the code is there to do. You can't mess with it.
So I think maybe in the future we want to do a full episode on stablecoins, but let's keep
Yeah.
going with story time with Jared.
Yeah. So yeah, to move out of stablecoins a little bit, one of the things that could accelerate some of these other problems is the continuing crash of the crypto market and the stock market. So we've seen that there's been some reporting on the holdings of MicroStrategy. They've got a lot of Bitcoin, and they've also got some loans to afford that Bitcoin. And there's been reports that if the price of Bitcoin were to fall beneath the $21,000 mark, that MicroStrategy could get a margin call. And I'm guessing this means they're going to have to liquidate some of their Bitcoin in order to pay back some of their debts, which, for one of the largest institutional holders of Bitcoin, which could mean that they have to sell a lot of Bitcoin, which in a current bear market could not be a very good thing. It could continue the big sell-offs coming. And, they're not the only one. They're just one of the biggest ones. I'm pretty sure
Well, I
there's a
mean,
lot of other...
$21,000 Bitcoin is not unreasonable also.
No, I don't think $21,000 Bitcoin is unreasonable at all. But I think there's a very good possibility we could see Bitcoin go down to that price, and not in too long either. Yeah, so it's not impossible. So with Bitcoin leading the market, we see every time Bitcoin makes a leg down, everything else is going to make a leg down as well. With the possibility of these large cap stablecoins going away, this could cause some huge turmoil in other things in the crypto market. So, for example, you look at Curve and Platypus, right? Their whole reason for existence is stablecoins. If Tether and USDC were to just disappear, these things don't exist anymore. They're gonna...
No, I mean it would create an insane cascading effect, right?
Yeah.
So if either USDC or Tether were to take a dive, one would think that Bitcoin would probably take a dive as well, and
Well,
it
yeah.
could also happen the other way around, and then it would have a cascading effect through all the protocols who are using these for all types of positions.
Yeah.
And then liquidations may not happen on time because they're happening too fast, because the price is crashing too fast. And then the oracles would not be able to necessarily communicate the prices on time, or there would be some shutdowns, and it would just, I don't think anyone knows what happens, but bad is probably the right word.
So we can see that in some kind of cascading scenario where Bitcoin's going down, people are getting margin called, they're having to sell off tons of Bitcoin, could potentially lead to stablecoins having liquidity issues, people trying to get out of the market. Those things could have problems as well. And then you just have one thing after another and a domino effect of different things crashing because their collaterals or their basis is rapidly deteriorating, So Curve could crash, Platypus could crash, and then all of those different things built on top of those things could crash as well. And then you look at, for example, Aave, which has, some of the largest TVLs in the market. If either side of one of those things were to have a serious sort of catastrophic event, the cascades of liquidations that could take place would be enormous.
And do we think there's any catalyst for this to happen?
Just continuing, deteriorating environmental factors of prices going down.
So you see, let's see, the market going down, which is correlated with Bitcoin. So Bitcoin continues to go down, and this may somehow affect Tether and USDC. How does that happen?
Well, so if there's some amount of these tokens making up some of their collateral, that could be a problem. The fact that people want to get out of the market could create a run on Tether or USDC. So if you want to withdraw your funds into just straight cash, if they run out of collateral because they're not fully backed and their previous backing of different assets have also devalued, then you want to go and take back your $100,000 or $1 million from Tether or USDC, and they just don't have the funds for you. That's it. They're over. Like they're just gonna crash. They're gonna end up in a UST scenario.
So, I mean, there's sort of like a potential death spiral for these dollar-backed stablecoins because they're not actually dollar-backed. In the same way that there was a death spiral possibility with USD and Luna because
Yeah.
the two assets are tied together. If you think that Tether is tied with Bitcoin and one starts going down and then people are retreating out of crypto altogether, the other one starts going down, and this goes on and on and on, right?
Yeah.
Especially if Tether is actually not able to reimburse people. Um, okay, I see the storyline. This seems like
I just want to put out like a kind of disclaimer. I'm not saying that this is a guaranteed thing to happen. There's no telling. These things could exist well into the future. They could potentially never go away. I'm just trying to highlight a potential scenario that I think is maybe underappreciated.
right, and yeah, this seems pretty unlikely to happen, in my opinion. But it does also seem like a true and real systemic risk that we have in the system.
Yeah, I think that if anyone thinks that any of these things are too big to fail, you could be a little bit too, might have a bit too much confidence in them because anything could go away. It's not impossible.
Right, and unlike the car companies going away or the real estate market in the U.S. going away, and then the government having to step in, no one is stepping in for this.
Right.
There's no government
Yeah.
stepping in to save Tether because Tether is an international company. There's not one body that has an aligned incentive to do that, right?
Yeah, and so when you look at the potential problems with stablecoins, right? If you compare them to U.S. dollars, for example, at least the U.S. has a lot of things to enforce this currency continuing to exist and having value because they say so. In the crypto economy, it's kind of like there is no one to enforce the value of these things. So to kind of round off this discussion, if there's a possibility that this could happen, I think that there's a likelihood that these things are not just going to go away because blockchains and DeFi, like these are clearly winning ideas. And so I think what could happen is a potential crash and then maybe a resurgence of more secure, more businesses backing them, like big businesses or banks even.
And this would also mean a complete destruction of all prices for all crypto assets. So the advice there would be to keep some firepower on the side, not even in crypto,
Yeah.
or in very, very safe crypto stables, like over collateralized crypto stables, so that when everything crashes to near zero, you can get some great deals.
Yeah. So my whole point with this is that some people are overly bullish. The people who think that Bitcoin is going to $100,000 tomorrow, and the other people who think that this thing is just going to go away forever. Like, I don't think it's going away. I don't think it's going to $1 million tomorrow, but I think it's the truth is somewhere in between. Like, the tech is good, the ideas are good, but we just need to be a little bit more realistic with these ideas. I think what's going to happen is businesses with real value are going to come into this space and they're going to create very good assets and very good systems that potentially could be much more reliable. And people are going to get behind them because they're going to be much more resistant to, all these different factors that could cause catastrophic scenarios.
And what are the odds of this catastrophic scenario coming together, in your opinion?
I'm not going to say it's a very good scenario. I'm just saying it's not off the table.
Yeah, I think it's very unlikely, but
Yeah.
I do agree that it's a systemic risk, and it is a reason why we should turn away from institutions like Tether and Circle, which I think brought the world forward in a way. So,
Mhm.
thankful that they created the first stable coins, but it would be great that if we're using dollar-backed stable coins, that they are actually dollar-backed. This does not seem like too much to ask.
Yeah. I don't think it's possible. I don't think you can take a off-chain asset like a US dollar and make it 100% guaranteed to be an on-chain asset, like fully backed, because you can never be totally sure. You can never have that transparency into some bank account somewhere that's holding all these dollars. At some point, there could be investors, there could be people who want to, you know, change the way this works or change their policies or try and get more profit out of it, and then it could change. So I think the best thing is 100% transparent on-chain assets, which means crypto.
Yeah, so I think you could have a stablecoin, dollar-backed stablecoin that was actually transparent and dollar-backed. The problem with this asset is that it's still going to be centralized, and governments are still going to be able to, put their hands on it and decide on the flow of these assets. So there's always the government risk. Therefore, I'll always prefer an on-chain decentralized stablecoin, like an over-collateralized stablecoin.
I'd say, go take all this with a grain of salt. There's no guarantee that anything could go any way that anyone predicts. This is just trying to look at the market and seeing what we could see right now, what could potentially happen with it.
Yeah, keep some money on the side for this doomsday scenario. Will be a great buying opportunity if it happens. Okay. Well, if you have listened to us this far, thank you, and please follow us, and please follow us on Twitter. It will make Jared smile, and the world will be better. Thank you.